All right, let's break down a really wild hypothetical day in the market, November 14th, 2025. It was one of those days that started with a massive tech sell-off, but it ended with a twist that tells us a whole lot about where the smart money is really heading. Let's get into it.
So here's the puzzle we need to solve. The NASDAQ, right at the opening bell, just cratered, down almost 2%. But then it did a complete 180 and somehow finished the day in the green. So what's going on? Is the market strong, or is this a warning sign of some serious instability? That's what we're going to find out.
The final numbers here tell such a fascinating story. I mean, look at this. The Dow is clearly having a bad day, and the S&P 500 basically went nowhere. But the NASDAQ, after that roller coaster ride, actually ended up. These kinds of mixed signals tell you there's a real tug-of-war happening just beneath the surface.
And here's the key idea for the day. This was not a panic sell-off. Nope. This is what the pros call a healthy rotation. Investors weren't just yanking their money out of the market entirely. They were being strategic, moving it from those high-flying, maybe a little frothy tech stocks into safer places. That's the sign of a market that's thinking, not just freaking out.
So, what kicked off this whole shuffle? Well, the first big domino to fall was a warning shot from the Federal Reserve.
The air was just thick with what they call hawkish talk from Fed officials. All that means is they were signaling a tougher stance on inflation, basically telling everyone, hey, don't get too comfortable thinking we're going to cut interest rates anytime soon. And that kind of uncertainty, well, it forces everyone to rethink their game plan.
And here's the direct result. The market's confidence in a rate cut in December just took a nosedive. The odds dropped to a complete coin flip, just 50-50. That sudden change in thinking was a huge reason the day was so volatile.
So with the Fed making everybody nervous, the big question became, where does the money go now? And that brings us to the next chapter of the story, the Great Sector Shuffle.
You saw huge AI names like NVIDIA get hammered right at the open. But, and this is important, it wasn't because investors suddenly lost faith in the future of AI. Not at all. Analysts are saying it was driven by technical stuff, complicated options trades and things like that. The proof? The incredible dip buying that came in later. Investors were literally rushing to buy those stocks at a discount.
And this chart just paints the perfect picture of that rotation. On one end, you've got healthcare as the top performer of the day, and on the other end, communication services, where giants like Meta and Google live, was the weakest. That is the rotation in action, money flowing out of growthy tech and into a classic safe haven.
And if you want to see just how real this rotation was, just look at this number. A jaw-dropping $1.9 billion poured into the healthcare sector in a single day. This wasn't a little trickle, it was a flood of cash looking for safety.
Now, it wasn't just the Fed's comments that had investors on edge. There were a bunch of other signals flashing caution across the board.
Yeah, there was a lot more going on. You had Verizon announcing huge layoffs. That's a clear sign companies are tightening their belts. A key lending rate hit its upper limit, which basically means cash was getting tight for banks. On top of that, you had slowing growth in China, worries in the UK, and the whole mood just got really, really cautious. Even crypto got hit as investors started shedding risk wherever they could find it.
The VIX, which is basically the market's fear gauge, jumped up to 21.6. Now that level tells you there's definitely some nervousness in the air. It's heightened caution for sure, but it's not full-blown run-for-the-hills panic. It's more like a market on high alert. So, after all that, what does it all mean for you? Well, this whole day really highlights two very different paths that investors are thinking about right now. Let's break them down. You've got two completely different takes from some top experts. On one side, you have the bulls, like Ron Barron, who's basically saying, relax, this is just a temporary dip. The long-term story is still amazing. Then you've got the more cautious view from someone like Victoria Fernandez, who's saying, look, the market's showing some cracks. Maybe it's time to buy into those safer, non-tech areas.
So this table really lays out your options. The aggressive play, you buy the dip in tech, maybe with an ETF like QQQ, betting that the AI rally is about to fire back up. The risk, of course, is that if interest rates stay high, those stocks could keep falling. The more stable route, you follow the money into those defensive sectors like healthcare. The risk there, you might miss out on a massive tech rebound and underperform.
So if we boil it all down, what's the big takeaway? The market is doing this delicate, nervous balancing act. It's trimming some of the risk from the big tech rally, but it absolutely has not lost faith in the long-term AI story. It's a rebalance, not a retreat.
And that leaves us with a really fascinating question for the days ahead.
Was this calm, calculated rotation just a one-day thing? Or is this the market's new playbook for dealing with uncertainty? Or is this all just the quiet before the storm, with everyone holding their breath for NVIDIA's earnings, which could just kickstart the whole AI rally all over again? We'll have to wait and see.